Well, welcome to the Crazy Wisdom Podcast. I've got Andrew Einhorn here, and he is the CEO and founders of Level Fields. So welcome to the show.
Thanks for having me. Appreciate it.
What does Level Fields do?
Level Fields is a research automation platform um, focused on financials and trying to find trade ideas easily using artificial intelligence. So we saw this kind of hard part about investing that's in the environment where you need to have a very steep learning curve typically to get started investing in equities. We wanted to help change that.
Cool.
We also saw that there was a lot of opinion-based stock picking going on, and some of it good, much of it not so good. So we wanted to make a real data-driven approach to the market, but also give people an opportunity to do something other than buy and hold for the rest of their life, because not everyone's capable of doing that because they're in retirement, nearing retirement, need access to their cash, right? So wanted to have a way to kind of come in and out of the market or find emerging companies that are doing well, either that 3 months, the 6 months, or the 12 months. And so we use events to do that.
Hmm. What
And
do
I
you mean
think
by events?
yeah, well, I think we all kind of are familiar with the fact that a headline will drive a share price movement in the stock market. What we're probably not as familiar with is that the same types of events happen again and again and again. So CEO leaves, CEO arrives,
Uh,
right? Like that's going to happen a lot of times. And so if you have a data set of what the market normally reacts to that particular event, you can start to predict in the future how the market will react, just like you could to say, well, the weather in Texas in December varies between, 45 degrees and 65 degrees, and the average is 55 degrees. Therefore, next December, I know if I'm planning my vacation, what to wear. It's kind of the same with these events and stock price movements, right? We're trying to give a forecast to say, hey, over here it's rainy, it's going to rain for 3 days. This is the average amount of precipitation, so that's how far the stock typically goes down. And then over here we've got sunny skies. It's going to be 85 degrees. We think it's going to look like this for the next 3 months. Buy, hold, and then get out at that point. And so we're using this massive data set, this massive analytic data set of lots of different types of events to just help people make better decisions that are based on data and not just like a knee-jerk reaction to a headline.
I I love it because I have family in investing, not in the investing that you're talking about, but the early stage part of that where a company gets formed. And I think in the early stage startups, people have tried to do data approaches to it, but it's I think much more intuitive. It's all about the people who are doing it. But you're not talking about that. You're talking about equities, which is there is a huge amount of data. These things are really sort of stable, although recently our general economy has become sort of subsumed by the crypto volatility and the meme coin volatility as well. So there are various things that are changing in our and if you want to talk about it, we can definitely go into that. But I love this because it's about equities and giving people sort of like this thing that I found in the LLM world, and I want to ask you about the history, whether you guys were doing this before LLMs and the algorithms involved there. But one thing I've noticed with LLMs specifically is that there's two sides to it. There's one which is the generative AI, where it generates things for me, generates code, does all these things for me. The other side of it is that it teaches me about the things that it generates because it generates these just ridiculous castles of complexity, which I have no idea what it's doing. So it also teaches me. So there's a teaching layer, and it sounds like that's what you guys are doing as well. Is that you're generating things, but you're also teaching people about it.
Yeah, I would say it's definitely an educational tool.
Uh-huh.
Um, Largely, and this is feedback that we've gotten. So our users will say, hey, I love being able to understand why a stock that I own tanked 20%
Mm.
today or rose 10% because up until that point, it just seemed random, right? And that randomness kind of affects everybody's mood if it's randomly down and you're just like, okay, I'm 10% less liquid than I was like yesterday. Maybe I should pull back on the spending. So people like to know that there's an actual reason for this fundamental movement. And so, if you're like, oh, they lost their CEO. That's why the stock tanked. Got it. And they can look and see, when you see those ups and downs in the charts, there's a reason for it. And our events are appended to those charts to make it very, very clear. Like, hey, company came out, they had a good earnings report, stock goes up, right? Company reduced their dividend, stock goes down. So trying to make it just easier to understand, and then as you're watching it, you start to see, oh, this is really what forms the basis of the market, or these kind of events that mark progress. Now, to date, the issue has been a lot of news that doesn't matter. So most of it is noise, most of it is speculation or opinion. So we want to get all the
Mm.
garbage out and just focus on like what is material to the actual share price movement. And we do the correlation analysis on the back end before we pop the event into the platform. And then we basically teach the AI, hey, these are the things you need to look for, this type of event, and it learns all the different variations of how to say the same type of event happened. And it's effectively an AI agent that's going out, just searching through about 30,000 documents every minute, looking for that particular type of event. And then when it finds it, it has to go through a series of filters. Like filter one to your question is it a public company or a private company?
Oh.
For us, we have to say, no, it has to be a publicly traded company to be on our platform, to be on level fields. Fine. If it's a public company, now you need to know, okay, which is the right ticker, right? Is it Astra, this AstraZeneca, or is it Astra, the space company? So you tickerize it, then you match it to all the price movements, which are happening by the minute. And then you're effectively looking and say, okay, the event happened at 6 a.m. The stock price was up 10% by four. Therefore, the 1 day
Mm.
impact we're putting there as 10%. And then that creates a record in the system. And those records can also form the basis for other AI learning,
Cool.
either from us or others that want to work with us. But yeah, I mean, to your question, we started in 2020, early, actually, a little bit before then. Built our own models, built our own linguistic algorithms, did it specifically for finance, and did it in the middle of the pandemic where, the events
We're
of the
cool.
day were everything. Like it was whether you left your house or, we're
Yeah,
at the
interesting.
hospital. Yeah.
Okay, so 2020, and that was, did you already have experience? I love asking this question because it's so interesting that people had experience with GPT-2. Did you already have experience with GPT-2? And for those listeners who don't know, GPT-2 is I think it's called Da Vinci. It was like there were three iterations of the transformer model that became the LLMs with GPT 3.5. And so there were a few people who were out there on the edge already using GPT-2. Did that inform what you guys were doing? Or is this something you guys had built your own machine learning algorithms? And I know there are other ones out there that are also transformational that were also being developed in the late 2010s. So what's going on there?
Yeah, so we tried to use something early on, and the name's escaping me. That was like an off-the-shelf
Uh-huh.
training tool that had kind of the basic libraries, which most of the universities were the ones that were putting those out. There's like
Interesting.
five or six different universities that had like the basic tokenizations of things. And the more we used this off-the-shelf version, the more we realized like we were doing all the heavy lifting, we were doing all the training. There was really no point. We had to start kind of some scratch and say, all right, it's a generic version is not going to work for finance because it's just too niche, and then the amount of material that we would have to cover would be so grand because you're kind of like you're filling up the Grand Canyon with all the information that you need to train, but really you're only needing to look at like something much smaller of a
Mm.
subset.
Mm.
So it was like it doesn't make sense to train on the world's data. Let's just train on financial data.
Mm.
So we went very focused
Oh,
on
interesting.
finance and kind of ignored the other parts, which allowed us to specialize and then spend a lot less, honestly, and a lot less money and a lot less time training the system, like what to look for. And so if we're only feeding it certain sources, then we're okay. Um, the kind of the general bots, they have to have like these massive intakes of everything because it has to be an expert on every subject. But that becomes difficult
Interesting.
because some of those subjects contradict one another. For example, um, a blue bird that flies in the sky is important if you're science and nature focused on
Mm.
AI. For us, we're interested in bluebird biotech. So how do you know the difference, right? The AI has to understand that and has to do a lot of heavy lifting
Yes. Yeah.
if you're not kind of source or sector specific. So
And
that allowed us to move faster.
yeah, and this goes directly into something I love talking about. I did a great interview with Jessica Talisman, if the listeners want to go back, all about ontologies. And ontologies are a big thing throughout the web. Like Yahoo was built off of ontologies before Google figured out how to do peer review ranking. But now ontologies seem to be coming back. And if you are using ontologies, I'd love to talk about that. But basically, like knowledge graphs are becoming very popular, and ontologies are becoming very popular, and then all the things leading up to ontologies, which is like really a lot of human labor in order to kind of go through what you're talking about Bluebird. Bluebird is a bird, but it's also a finance company, and it's also probably some random other thing in other sectors. And so, like Bluebird as itself needs to be put into the
Sure.
context of what it is, and that requires a huge amount of human labor. More and more of it can be automated. But yeah, correct me if I'm wrong, or in this specific finance niche, are you using ontologies? What can you tell me about knowledge management as a discipline here?
I would say my last company, so I had a company before this one where we did use and develop ontologies. We didn't have AI for that. It was mostly Boolean. And to improve kind of the Boolean, we created these large ontologies because we were doing something similar, but for communications professionals at largely publicly traded companies where they needed to monitor events happening to their companies. So if it was a train derailment, and our client was a train company, the corporate execs needed to know the instant that happened so
Oh.
they could spin up their talking points and figure out how to get in front of the news stories. But to do that well with like a basic search, like you would run into a Google search, there was a lot of noise. So
Hmm.
then we had to kind of build these ontologies in the back end to say like, it was almost like if then statements, but like 100 of them. So if it's
Wow.
this, then it's that. If it's that, then it's that. Just give it a little bit like rules, structured rules to follow of when to omit something and when to include something.
And was that with all with Google APIs and such? Or
No, we built that custom.
okay.
Yeah. So we spent 10 years building that system.
Oh, yeah. Are you a
And so
developer yourself or
I am not,
okay.
I'm just kind of the architect of it at a
Yeah,
high
yeah, yeah,
level,
yeah, yeah, cool.
so more on the UX side. Um, but we have a team of really good developers that can figure this stuff out. So my job is more thinking about like the logic and the
Uh-huh.
business rules
Hmm.
and how the flows will work, and then it's sort of like architect versus engineer on building a house. Um, and so anyway, today, we don't rely on the ontologies per se because the AI largely builds them
Hmm.
itself
Hmm.
through kind of like the knowledge graphs and some of the neural networks that are on the back end because it finds those patterns and associations and gives it basically rankings. So if you and I appeared in the same article 120 times, then there are 120 different articles
Yeah.
and it was always within like two or three sentences, then there's obviously some kind of relationship that we have. It could be a relationship that we were brothers or cousins or something, or it also could just be content related. And the more times that happens, the more it's sort of like these ontologies become created. It's like,
Oh,
oh, well,
interesting.
Trump and Musk must be really close because they're always in the same article together. And then that gets paired with, well, Trump and Musk always appear in politics stories. They always appear in news stories. They always appear
Interesting.
related to the White House. They always appear related to Tesla. And so now you have these sort of automated structures that get built on the back end. And if you need to for reference, when you're kind of cross-checking for us, like it's an event, right? Does this event occur? Is it in the right space? Is it in politics, finance, news, nature? We can kind of parse some of that stuff out. And there's a lot we haven't used the data set for on the back end, but like the data holds these connections.
Hmm.
And now, as a company, we kind of figure out like, okay, well, how do we pull some of this intel out and put it in a way that users will be able to use it? What do we do? We could do a big knowledge
Yeah,
graph and
interesting. Have it confuse them. This is it's because I've been doing a lot of vibe coding recently. I'm sure you're familiar with the vibe coding, where it's now you can create applications using that generative AI. And it's so interesting to go into the technical details. Now I've been doing it for so long on the show, just interviewing programmers as well, that I'm starting to get into it. But it's like my brain is not a technical brain in terms of understanding these technicalities. And so, one of the biggest unlocks for me, going back to that educational aspect of these LLMs, is that I was going into React and I was taking these courses on React, and I was just getting totally overwhelmed with the conceptual details of what is state or what is all of these different things. And then I realized that I could ask the LLM, how does this connect to a user? How does it connect to somebody coming onto a website and being interacted with state? And then once it explained to me from the user's position, it all made sense. And so I feel like a lot of what I'm getting from you is that it's a big job of a founder or a CEO to actually, like, that's what you're focused on, is translating the problems from real people to this technical stuff. And I think that's something a lot of engineers certainly miss, because all the engineers are really excited about the latest and greatest type of thing. They're early adopters and all this different stuff, and that's totally separate from the users. Is that accurate? Is that a good understanding of what you do? Do you think that that's also what a lot of other founders do really well? Is
yeah,
translating?
you
Yep. Mhm.
yeah, I mean, I call it problem shopping.
Problem
Just
shopping. I like it.
right. That's when you start a company, is what you're doing. You're problem shopping. And then once you identify a big enough problem or a problem that is interesting enough to solve, then you figure out, is there money behind it? Can this
Mm.
sustain as a business? Then and only then do you figure out what the solution is. And then as part of the solution, there's like, well, we can solve the problem, but then we have to solve the problem in a way that people want you to solve the problem with, right? So like,
Which is a big one. That wanting you to solve is a
right.
complex mystery sometimes.
Yeah, and someone wants to bang on a nail, and you're like, "Well, just take a rock," right? And they're like, "I don't want to use a rock. I don't like the way it feels in my hand." I'm like, "Well, here, try this hammer," right? And so that's kind of like the job of the founder is like, well, it's not just like, yeah, we can give you a rock and you can smash the nail against the wall, but they're like, that's not something I really want to use. I need it to look a certain way or feel it a certain way, and we've discovered this, on the Level Fields platform where initially we launched and we thought we wanted to do something completely different,
Mm.
right? We want for people to think about events and not think about companies and to think like, okay, event A
Mm.
happens, reaction B occurs. Doesn't matter what company it is because the reaction is going to be the same as long as the company looks and feels the same as other companies like it, right? So if it's a tech company that's a mid cap and the financials are okay, they'll all react the same way to the same event. And we thought, all right, let's
Interesting.
just put that out there and let people trade this way. And overwhelmingly, it confused the hell out of everybody. They were like, wait a minute, how do I find my stocks? There was such like a strong
Mm.
drive for people to then, the only thing I know about the market are the 10 stocks that I own. I want to search for Apple. I want to search for Palantir. We didn't have a search on it.
Interesting.
We're like, no, this is not a search. This is like a feed of real-time intelligence and data. And they're like, I don't get it. Where's Apple? How do I find Apple? We're like, stop focusing on the stock you already own. This is about the stock you don't own that you could trade. And it was just like a total UX fail, right? Or not fail, but
Yeah,
not a
yeah,
way to build the product, right?
yeah.
So we had to kind of think about that. Be like, all right, we need search, we need a watch list, we need some of these like traditional features that people are more comfortable with. And even then, like it's still very much a workflow issue. People just get like the longer you have invested or traded, the more ingrained your process is,
Interesting.
and the more difficult it is to get that person to change their process. So part of the part of the solution development process is identifying like what are all the different processes that people are using and how can we kind of integrate into their existing processes without completely, changing the way that they do things because people don't want to change that fast. And it's something that like it kind of irks me just like as a
That's that guy.
as
Yeah, yeah. You want you like
a person.
you're moving at the speed of electricity, basically, where you want to change, and it's the same thing for me. It's where it's like I want to, I like, and I as you were talking, I was like, we're headed there to a place where you and I can have UIs that are constantly changing to reflect whatever goal we want. But then there's a large section of the population who would probably be totally not want that at all, right?
Yeah.
Yeah,
Yeah,
yeah.
exactly. They just get lost in it and they don't know how to integrate this new thing. And then you end up spending a lot of time on help text and videos to sort of
Mm,
showcase how to do it. You're like, wow,
mm.
okay, this part of the process is quite difficult because it takes a lot of feedback loops and then you don't get really quality feedback from most people, right? Like you can see
Wait,
that events.
how do you get quality feedback from people? What does good quality look like?
Well, if someone we get people that write into our support line like, sorry about this product yesterday, I just don't think it's for me. Can I get a
Mm,
refund?
mm.
Not useful feedback for
Yep,
us, right?
yep.
So now, um, in the
It's
early
they just don't like it, and that's what they give to you, but there's no way to learn from that about what would make it better for that particular person.
right, and so we did a very painful like refund policy to get better feedback.
Wow, that's
We
cool.
would say like, all right, here's the refund policy. You can wait a year, and then if you still don't like it after a year, we'll refund you.
Oh, interesting.
Or if you really hate it and you want a refund, you have to give us quality feedback
Yeah,
and we
yeah,
will
yeah.
refund you and we'll break our own policy.
Oh, I like that.
And it would and people hated us
Yeah,
for
yeah,
it.
yeah, yeah. Yeah, it's like it's friction.
It's
Uh,
total
yeah,
friction.
yeah,
They thought
yeah,
we were complete dicks.
yeah.
And we're like, no, we really just need to learn. We want to solve this problem to help people like you, but we can't do that without people like you actually telling us what is it that you don't like. And so we started to get better feedback. It was like, well, I don't get it. Or there's too many different events. I don't know where to start. Or somebody says like, um, I don't see my stocks, right? How do I look at like just what happens to my stocks? Can I set an alert for just my stuff? And you start to see like the pattern and what people are looking for.
Hmm.
And then people are like, well, I don't know what to do with all the filters because they're just like one filter that can make it better, where I just push like a button and then it filters out all the lower quality signals, right? Because they wanted like the big events. And sometimes the share price moves 1% and it's supposed to move 1% because that's the size of the event. And they're like, can I just get rid of like the small events and only focus on the big ones? Which I get. And we totally internally agreed. Although, there was usually a disagreement between like technical folks that wanted every possible
Oh, yeah, of course.
filter,
Yeah,
right?
interesting.
And control. And then the average user that like, I don't want to see any of that. Just, make it rain like an ATM machine
And
does.
you can't do two UIs for two different people or two different sets of users. Is that outside the bounds of what's currently possible?
Well, within the funding that we have, yeah.
Hmm, hmm.
If we got a Sequoia or something behind us,
Yeah.
sure,
Uh-huh. Yeah.
that becomes more viable. But
And nobody does that. Nobody, well, I guess Facebook does a little bit of that. Facebook changes their UI or feature. They do like large set scales of like if they need to test a new feature, they go to New Zealand and only implement it in New
mm,
Zealand with in order to do A/B testing and stuff like that. So that
yep,
does exist at the large scale. I think with the vibe coding and the ease of engineering, like it's not easy, but it will start to change the cost benefit on that particular thing. But I think you're right. It's like not a good try to do it. So, but going back to what you were saying, you were talking about the technical users and who wanted all of the information, and then a larger subset who didn't want the information. And what were the knowledge management things that you learned in that particular aspect? Because what you're talking about is a knowledge management problem of like there's a knowledge there's some sort of users you have to kind of find that thing that allows all the most amount of users to find the value in your product, basically.
Right. Yeah, you're always looking for that 80/20 model, for sure. And it's always it's a bit of a mission to start to say, okay, well, what is our ideal user? Like we built the product, we built the solution to a problem, but we didn't know what our ideal user was. We have, of
Mm,
course, ideas, certain persona, certain age, and so forth. But that evolves over time as you start to see like the person might come in and they're, let's say, if our target user is middle-aged millennial, right? They're coming in and they sign up, and that might be your highest sign up rate, but also might be your highest churn rate. And you got to figure out why.
oh man.
And you're like, oh wow, they have the best, cost of acquisition,
Yeah.
the worst retention. Like what is going on there? Whereas others might be like a Gen Z might come in and be like really high cost of acquiring because they don't respond to ads well, but they stick around because they're just faster to adopt new technologies.
Whoa.
So then over time, you have this sort of graph that it starts off like much lower for a certain demographic, and then it gets more and more and more expensive over time as the churn rate goes up. And another one that you're coming in here a much higher rate, but then, the cost per year starts to go down because the retention is better, or they buy up on a higher rate to a higher subscription. And it can take a long time to figure this out, I
Yeah,
mean,
that's because it's like the problem with the scientific method as well. Is like how do you prove something over long periods of time? Well, you need to wait that long period of time, and you need to
yeah,
take
exactly.
accurate data the entire time, which is something that a lot of people kind of obsessed with science miss out on. Is that it like takes time to do a lot of things, and now I'm getting with entrepreneurship is the same thing, and so you have to just do sort of gut check, basically, right? Yeah,
Yeah, I mean, you're doing the scientific method. You have a
yeah.
hypothesis, you run it, you test it, you look at the results, and then you recalibrate on the next hypothesis and you iterate. If you don't have a big team, you can only do one or two of these things at a time. If you're Facebook, you can do, 100 hypotheses at a time all
But they
across.
lose. But the problem with Facebook is that they lose their intuition. Whereas, like in a startup, you have your intuition and you have the ability to move fast, basically. So you can. Do you agree? Do you agree? Like that the large behemoth that Facebook slash Meta is just they lose their ability to act intuitively according to conditions. Is that right?
I would guess so, but I think they gain the ability to like reach out with requests,
Yes.
specifically to
Yep.
users. Like, would
Yep.
you join the user panel? And they can probably compensate you a couple $100, to do that
Mm,
at scale. Our version of that is like people go through the support line and they start to complain. Then we start to try to
understand.
turn turn
Yeah.
that into lemonade. They're saying like, okay, well, tell us more about like when you say you can't find anything, can you be more specific? Right? So you can't find a button, you can't find an event, you can't find a filter. And they're like, I can't find the stocks that I'm looking for. I'm like, okay. And then you have to really just keep pulling that back and, times thousands of people coming through, you start to get the picture. And it's a really interesting, fintech is an interesting space. Investing
I
is
bet.
particularly interesting because you have so many different types. You've got, even just stock, right? So you have stock investors, but you have penny stocks, and then you have day
Yeah.
traders of stocks, swing traders, long-term investors, dividend stocks, tech stocks,
Whoa.
industrial stocks, small caps, large caps, right? That's just with stocks. Then you have the option traders, same thing. So they do like basic
And
calls, puts, and so forth. Hmm.
as an equity platform, that's all of it, right? There because stocks. What is the formal definition of equities? Does that include stocks, but is greater than stocks? It's not bonds, right? Bonds are not included in
Right.
that. Yeah. Okay.
Correct. Yeah, it's just stocks. But if you know how the underlying stock is moving, then you can trade the derivative, the option
Hmm.
on it.
Oh,
So
interesting.
we have both stocks. We have a lot of options traders. Options traders tend to come in and out faster. And the main pain point for an options trader is to figure out like what is my ideal entry price and what is my ideal exit price, which is what Level Field's platform shows.
Interesting.
right? Because it's like, here's the average price move for this type of event, and this is how long it takes. So back to the like the weather report, like they know, okay, it's going to be 3 weeks of rain, and then I'm out of there. Um, but you also have the others that come in that don't really know what the platform does, and they trade
Mm.
currencies, or they trade crypto, or
Oh.
they trade uh,
Wait,
ETFs.
so you can do that stuff on level fields?
We don't have cryptocurrencies
Yeah.
on the platform.
Yeah.
We do have a cryptocurrency event
Oh,
where
cool.
large, or really any company that's adopting crypto. So
Interesting.
Visa suddenly starts accepting, crypto payments for Macy's. That will be an event that comes onto the platform, so you can monitor it like a news story, but very specific to a public company that
Yeah.
is
Yeah.
utilizing crypto in some new form. Like Tesla starts to be able to sell Teslas with Bitcoin. It will be on level fields. But we don't actually track the price of Bitcoin, or any other cryptos on there.
That is so cool.
Uh,
Um, if you had anything else to say, feel free to go, but there's like it's the philosophical large sort of meta angle of technology fintech is really interesting for me because I started out in 1997 on E-Trade when I was no, it couldn't have been that early. It would have been 12 or 13 years old. But I basically was saving up my lunch money and I invested in something called Webvan on E-Trade.
mhm.
And Webvan totally failed. It was one of those iconic startups that just spent ridiculous amounts of money on Office
Groceries.
and all these different things and crashed and burned. And so I invested in E-Trade and I was like I stopped investing in stocks and I guess I still haven't come back to stocks, but I do invest in cryptocurrencies. And so I probably will get into early stage investing in stocks, but this world of equities is really interesting. And so I've seen multiple iterations of basically finance and technology coming together. And it's so interesting because finance goes directly to human nature and desire, right? Like it shows you what humans actually desire. And there are all these interesting manifestations of it. And I'm going to start to use your platform because it's a really interesting. And I love this idea of events and cryptocurrency. There's one cryptocurrencies company that I think there's a relevance to, which is Chainlink. And
Mhm.
Chainlink is a Oracle platform. They're trying to give all the different blockchains essentially abstract senses to the real world, also in these events and stuff like that. And yeah, this whole idea of an event and narrative. Well, actually, this is a great question for you. Do you think that finance is run by narrative, or is it run by real things going on in the background, or is some combination of both?
It's both.
It's
Yeah.
both. Yeah.
Yeah, for sure. It's both. It could be because you get a lot of narrative coming out of the news media. You get
Hmm.
narrative coming out of the analyst community. There's a strong tendency within finance to have groupthink,
Yeah, interesting.
largely because
Yep.
everybody has the same courses in
Yep.
college,
Interesting.
and they teach you how to react to different environments the same way. So like there's literally a playbook for if you're in a recession, this is what you
Yeah,
invest in. Coming
interesting.
out of the
Yeah,
recession,
interesting.
this is what you invest in. If you know that's what they're going to do, pretty easy to get ahead of it. You just have to figure out like when to get in. So,
That is,
okay, they're going to buy healthcare stocks and utilities going into a recession. And if they don't think there's going to be a recession, then they go into more riskier assets. And so you can kind of see this back and forth on the market lately. And it's basically the narrative is Trump's going to cause a recession,
yeah,
sell Bitcoin, go into gold, buy utilities, buy healthcare. And then the next day, oh, wait, we got to deal with China. Screw gold, go into tech. We don't need utilities. We don't need safety. Who needs bonds? Like we're all in the S&P, and it just goes flips back and forth, back and forth, back and forth. So that's a big piece of like the high level movements.
yeah,
Underneath that, where we kind of like call it like the guts of the market, are the individual stocks that are not necessarily caught up in that movement.
Why?
because
Because they're outside of the ETFs, they're outside of the sort of professional traders. They're just like hanging out on the edge cases. It's almost like the long tail of stocks, basically. Is that right?
it's a long tail of stocks. It's also the ones that are putting out like real data pieces. And
Oh,
so investors who are trading or buying stocks, individual stocks and not indexes and ETFs are going to look beyond the narrative and say, it doesn't really matter what the narrative is. I'm looking at this like there's a company front door. And we were telling our users the other day, like, this is a great recession resistant company. We're not just saying that from opinion. We're looking at it like it's
mm,
not moving when there's a recession fear at the narrative level. And it's also putting out really great data. It's beating earnings, it's growing revenue. Like, there are real numbers. The valuation is justified. It's not like a Tesla valuation that's based upon 20 years in the future. This valuation is
wow.
based on the here and now. You say, look, they're making whatever it was, $3, I can't remember the EPS, earnings per share. And you say, well, conservatively, if it's worth 20 times, then it should be a $60 stock. It's trading at 50, so it's undervalued. So investors who are into value, fundamentals, math, they're going to go after those types of equities. I'm one of them. But we also look at it through the lens of an event to find
Mm.
them, because usually the company will come out and say, hey, we think we're undervalued, so we're going to start buying our own shares back.
Oh, interesting.
All right. So we capture the event, and then the stock will go on a run after it already hits a big bump that first day on the announcement. And you typically follow this pattern where, okay, the next thing that happens is the analyst covering that stock raises his or her
Yeah,
price target.
yeah, interesting.
Then it's on CNBC and you hear Kramer and these guys talking. What do you think about the price target raise from Goldman Sachs, on front door? They pull up the chart, and then everybody who's watching it at lunchtime who's never heard of the stock starts to buy it, and then that's how the momentum happens.
Wow.
So we try to figure out before all that.
Yeah, yeah, interesting. And the data, I mean, I imagine the data set that you guys are building is just a wonderful data set as we move into the LLM. So like a proprietary data set that, yeah, it's like that's very cool. I'm very excited about going and testing it out. It's funny because I've never like asked myself this question of like why did I have I not started to invest in stocks again? And it feels like part of it is that narrative that the fact that academia says that all of this stuff is figured out and they got their playbook and everything like that. Part of it's like that thing just like invest in my head that I can't participate in this market. Oh, but the crypto I can participate in this market because I understand it more. But this traditional thing is just like outside the bounds of what I'm able to do.
Just like anything else, right? There's always going to be variants of human
Yeah,
opinion. And you would say, like, if you were to survey people, there's a broader range of ideas,
yeah.
whatever it is. It could be what color is the sky? You could probably get 37 answers of a different color of blue.
Mm,
No, not
hmm.
going to agree to it. So to say that like the world is going to agree on what the right price is for Tesla
Interesting. Yeah,
is insane. It's never going to happen, which
yeah.
means that there's going to be these massive pricing discrepancies at times on the basis of sentiment. And other times it will get correctly priced on the basis of math, but there's no perfect answer. So in between, you can find those discrepancies, which is really what Warren Buffett's entire approach was.
Oh, interesting.
He just looked for huge pricing discrepancies between the value of the company and the current price. He's the first one to say, of course you can time the market. Of course you can trade on events. And he's been quoted on saying that again and again over the course of
Yeah,
whatever
interesting.
70-year career. So, but the dirty secret, like, banks don't want you to move money around, right? They can't loan out your money if it's not sitting there, which
Oh,
means
interesting.
they don't make any money.
And they all have these businesses that opened up with E-Trade, or probably maybe earlier than that, where they also get into equity investing, right? And those businesses conflict because on the one side they want the money to stay in the bank, but then on the other side they want the money to move, and one of those probably wins out in whatever their guidance they're giving, basically.
Well, they have different groups. At a big
Hmm.
bank, you'll have a group of
Interesting.
traders that
Yeah.
just trade proprietarily for the bank.
Yeah,
And
interesting. Yeah,
then
that's
at the
also
same
there.
bank,
Yeah.
you'll have analysts that are making recommendations on what to buy and sell. So there's a natural conflict of interest there at the bank. But beyond that, just think about like you trade crypto. So the concept of staking in crypto is the same
As
as
yield
loaning
or
out
yeah,
stock for
interest. Yeah,
shorting,
yeah,
right?
yeah.
And they make, 8, 9% yield loaning out Apple shares that you own and are just sitting there. And if you're trading Apple, they can't loan it out to a hedge fund or someone who wants to short
Ooh.
it. So they lose money. So buy and hold keeps everybody making money off your money.
Man, it's so interesting. What do you think about regulation in crypto? It feels like you have a unique insight into where it's headed. It's just because it is in some ways the same as our traditional finance world, but in other ways it's totally different. Like what are the inner like what part of crypto works the same way in terms of finance, and what part of crypto is completely novel, and what does it do? And I mean, do you actually like are you optimistic about crypto in general? Are you pessimistic of it? What's your take?
I'm generally optimistic. I mean, I have some crypto. I've traded a little bit more around like 2021, 2022. Got out for a while when I saw it a little bit crazy.
Yeah.
It started to like I think about it like 1999
Yeah,
dot
interesting.
com,
Yeah, yeah,
right? Where something big is happening.
yeah.
There's a large shift, but you also know that most of the stuff that came through was garbage and didn't have any longevity. It was just kind of taking advantage of investor sentiment and enthusiasm, or it was taking advantage of the fact that they could raise $100 million in 5 minutes just by saying .com in their name.
Yeah.
I feel that way with crypto, that you're going to have maybe call it 1 to 5% winners, and the rest will disappear. And then there'll be like the next set that comes along maybe 10 years from now that is, incrementally better than the first set or exponentially better than the first set. And then you'll have the winners, just like you had Amazon survive this whole time. You'll have like, I don't know if it's Bitcoin or Ethereum, like those, they will survive, or they're big enough where they can't fail because they'll buy something
Mm.
that they know they needed and they did enough, and this is how a lot of companies like Apple and others, they survive just by cash. They see something cool, they buy it, like Meta did with
Hmm.
Instagram. They paid $1 billion for it. Paper or
Hmm.
book value is probably 100 billion now,
Hmm.
and then they're building another business on it. So I see that's probably the way it's going to go. You're going to have some really interesting technologies that spin off of it, like Ripple. So I'm a big proponent of that because I can't stand the
Hmm.
banking system. So
Interesting.
just being able to move money at light speed is a game changer.
Institutionally, because
Institutionally,
that's
yeah,
the
for
key
running,
part. Yeah, interesting.
yeah, I mean just for running a business. Like if I'm
Yeah.
wanting to get stuff done and they're like, "Oh, your wire will arrive in 3 days," it's insanity. That's gonna like, if I'm trying to partner with a company in
Yeah.
Japan,
Yeah, yeah, yeah. Interesting.
you
Cross
know,
borders. Yeah, 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 yeah,
right? And it's
yeah.
Wednesday and they're not going to get the wire until Friday. Then we have a weekend and we can't start work until Monday. You just delayed me 5 days because it took 5 days to get, my money from here to there. That
Which
kind of
it
stuff.
which is, as you know, and maybe some of our listeners might know, it's just like whenever you're dealing with finance and business, it's like until the money is in the bank, all bets are off. And this is
Exactly.
uh,
Well, especially in this
yeah,
environment, like
yeah,
Trump can change
yeah,
his mind
yeah,
in
yeah,
5 minutes.
yeah,
The economy, the whole world economy could change in 5 days.
yeah. And it's so funny that like Trump is just like a bull in a china shop, and it's so funny because he's messing with China, and so like just the narrative we've been talking about narrative, and he's just like a chaos agent in terms of changing the narrative. But the
You
whole
know,
like go for it,
uh,
yeah, yeah,
no, I won't get political on it, but like
yeah,
it's just an event, right? Like
yeah, it's
one
just
day.
yeah,
And we we try to do this internally because we've got users who don't subscribe to the platform, but subscribe to kind of like the editor's picks
oh,
that we put
interesting,
together.
yeah,
So they're like, I just want you guys to just tell me like what's the best
what's
event,
going on, yeah,
what's
yeah,
going on. And so
yeah,
we send that to like premium members, and like we literally have to put a caveat on everything. So like, but Trump might change his mind by the morning, so be prepared to do this. And we go in thinking like, all right, market's gonna tank, like these stocks are gonna do poorly. But we have to be very careful, like
uh,
monitoring it because we like, don't want to cause people to lose any money. And we've done very well, like
Yeah.
5,000%
Yeah.
return
Indeed.
since we launched the program. But
Whoa.
at the same time, like we sent out a couple today, the trade ideas were up like 10% in 2 weeks. And so we're looking at it and going, like, we're just as likely to get some negative headline about China and the US or Trump walking back, how, or just saying something off the cuff, like,
Yeah.
80% tariff wouldn't be so bad. And then
Yeah.
the market
Pharma stuff.
changes.
Yeah. Yeah.
And then 10% gets wiped out. So I'm like, let's just take the wins. 10% in 2 weeks. You can't complain about that.
Yeah. So, oh man, there's a great question I had. Oh man, oh, that's a good one. Uh, so we got about 10 minutes left, and yeah, it's AI. Yeah, okay, there it is. The narrative. So one of the most interesting things I've started to investigate recently, I do believe machine persuasion is coming. And I actually already
Mm.
know this. Machine persuasion is happening, and there's various philosophical thoughts on how it's happening and whether there's a real conscious element to it. But I think it's happening. Like I know on Saturday I had a very strange call with somebody who's getting into an autodidactic loop with the machines where they're in a loop where they just can't they're going to it for epistemological and in many ways sort of divine inspiration. And they're getting in this loop where the machine is persuading them. I don't think the machine is persuading them for any goals, but it's a narrative machine, so it's just creating narratives that is bringing the person deeper and deeper. And so I think that's going to start to happen. And I think it's going to start to happen specifically in markets, maybe with some bad actors, maybe with good actors. But do you think that the world I just laid out is going to happen? And do you think it's going to affect finance in terms of machine persuasion and people getting into these loops?
Yes,
Mhm.
yes, for sure. And largely because of the documents that they're trained on.
Mm. Oh, yeah, because
So
it's the internet. Yeah,
it's the internet,
yeah,
right? So the internet is people putting out stuff. So if you're putting out a lot of positive articles about, Palantir being the next trillion-dollar
yeah, yeah.
company,
Of course, yeah,
eventually it's going to get spit out the mouth of these chatbots
yeah.
because it's not really thinking. It's just generating based upon information that's out there. And it's kind of like how I think about it. Like our system is more like the fact finding
Mm,
and the analytics. So we're kind
mm,
of like the brain.
mm.
We see it, hear it, process it, put it in storage. And then a chatbot
Oh, good.
is the
Yeah, yeah,
mouth. They're
yeah.
just spitting it out, they're summarizing it, and you're interacting with it just like we were with communication, but behind it, somebody else sourced that info. Could be the New York Times, it could be us, Level Fields. Like they're just summarizing it of what's out there. And largely the same with code. Like if we're trying to generate code, it's looking at a massive code base of hundreds of sites and then saying, okay, a lot of them did it this way, which I use, to say like, it helps me build requirements for the engineers to say just give me the specs typically for a SaaS login module. Okay, you need to forgot password and you need this and you need that, and that's fine. But I think when you get into particularly opinion,
Yeah.
and I do this just I geek out on this stuff. I'll go to Perplexity, I'll go to ChatGPT, and I'll go to Grok, and I'll ask the same kind of questions to check how like woke is the training of the system,
Yeah.
or how
Yeah.
sensitive it
I had to
is,
do
or
it
how
yesterday. Yeah. Yeah.
yeah, how
Yeah.
PC it is.
Yeah.
It's amazing how different the answers are depending on the platform. Some of them, like ChatGPT, will flat out not answer the question. If you ask something that's like, why is this population so X? They're like, I cannot answer that question. What it really means is like, I will not answer on the basis of that question sounds racist, sexist, bias, what
It,
prejudice, whatever.
it hit off of its narrative event filter. There's one question I want to ask related to this. So no, not question. It was something that I feel like you guys might provide a value because all of the publishers I feel like are going to start, and all of the SEO guidelines and all of them are going to start to have negative incentives to start using AI generated content. I feel like your data set might be the one data set that doesn't have negative generate because it's dealing with truth and finance. And so you guys might be a good sort of supplier of data to go because it goes into that machine persuasion question because we're rapidly entering a world where I mean we've already been in the world where truth isn't necessarily valued, but the one place in the world truth is valued in some ways, in other ways it's not, is in finance. Any thoughts there?
Yeah, I mean, I think that's true. I think that's why we've done well. I would say in acquiring people that are very data focused
Mm.
and not looking, there's a good amount of people out there that are just tired of opinion, whether it
Yeah.
comes from a bot
Yeah,
or it comes
interesting.
from
Yeah.
someone saying they have the next Amazon. If you just pay them $1,000, they'll tell you what it is. Like that kind of crap. People are just tired of it, and that's what we want to avoid. And in finance, like there's a fight, I would say,
Yeah.
going on in finance
Yeah.
between the fundamental investors who
Yeah.
look at the math and say this company is worth this because if I broke it into 20 pieces and I sold each piece for X, this is the total value. And others that are just like to the moon,
Yeah. It
rocket,
doesn't, nothing else matters.
rocket emoji.
Yeah. Yeah.
Like, who cares?
Yeah.
Who cares what the price of Tesla is
Yeah.
today? Like, they're
Interesting.
gonna have robots that run the whole world. Just buy it. And the momentum folks that don't really care until the momentum changes, and then someone is left without the chair to sit when the
Yeah.
music
Yeah.
stops.
Yeah.
There's always the bag holder. So there's
Yeah.
definitely a battle going
Yeah.
on,
Yeah.
and it's not just on people because they are developing algorithms to specifically trade based upon these different theories, right? Trade on momentum means until the stock pulls back, you just keep buying it. And then the second it starts to pull back, you sell it, which is why you get these wild 1 day swings in the market that are 10% up, 11% down, is those algos change on the basis of like one or two variables. That part I think is very scary and
Yeah.
dangerous.
Dangerous. Yeah. It's
Um,
it's like 1928. I mean, 1928 was off of the background of electricity, so the electrification of the entire economy. So there's something solid there. There's something massive deflation, I think, that society had never seen before. But then it led to what you're talking about, but on a proto scale. And now we're talking about it just like on a much stranger scale with a lot more different technologies at play.
yeah, and it can be manipulated
Yeah.
because
Oh, interesting.
if you've got algorithms, right, and let's say you're a large enough hedge fund, and you know the algorithm of rival hedge funds, you could theoretically start dumping
Yeah,
and then
interesting.
trigger the momentum algos to dump further while you pull back on the dumping, wait for the crash, buy the perfect dip, and then do the opposite end of the momentum trade.
Wow. So crazy. It's such an interesting world and a crazy world. But we're out of time now. Thank you so much for coming on the show. And how can our listeners find out more about you and Level Fields?
Go to levelfields.ai. We've got a free newsletter you can subscribe to. You can subscribe to the system. Got a YouTube account, Level Fields AI as well, with lots of free stock tips, so we can get started pretty easily and hopefully, learn something along the way, make some money along the way.
Cool. Thank you so much.